In the last couple of months of working with small business owners, I've seen that a lot of people do not understand the difference between being a self-employed person and being an entrepreneur. How do you distinguish or differentiate these two terms if your business cannot run without you? And this is practical. Just think about it for a minute. If I leave my business for 30 days, will it run smoothly without me? Your business cannot run without you. Then you don't own a business. What you have is another job. Real entrepreneurship is about systems, scale, structure, and not hustle. If I say structure your business, I'm talking about these four key terms. The first one is operations. I'm talking about marketing and sales structure. I'm talking about customer service structure. I'm talking about finance structure. What are some of examples that I can think about? From the operations point of view, what is the standard delivery timeline? Let's say you're a fashion designer on this call and you want to set up operation structure for your business. You make different garments, skirt and blouse, gowns, and all of those things. Those are the items that you make in your business. In setting up structures for that kind of operations, what you do is you may have to time yourself. Maybe you get one of your tailors and I want to find out how long will it take for us to make skirt and blouse. If it takes you 4 hours and you do it again and it takes you like 4.5 hours, you do it again, it takes you about 4 hours, 45 minutes. You can now come up with an average. Say, okay, the maximum time allowed to make this item in our business is 4 hours, 30 minutes. What you have done is to create an operation structure in terms of time for that particular element of your business. So you do that across board, and that becomes like a Bible for your business. So if any tailor now takes 5 hours to make that item, you know that you are taking too long. You are going above the standard. So that is what structure allows you to do. What are the marketing activity that is standard in our business? Customer service. I used to say that when we say get customer data, when customers come into your business, for the last 6 months, do you have the data of all customers that have come into your business, that have bought from you? What is the utility of this? One of the very important utilities is want to maintain friendliness with your customers so that on their birthdays, on their anniversaries, you can send them presents. As good as that is minoring on the major. That's not the essence of customer data. One of the most important advantage of having customer data is so you can make strategic decisions in your business. Let me give a typical example. You want to open another branch of your business. What are the metrics that will help you know that this is the best location to choose? Customer data. You just go into your customer data and look at it. In the last 1 year, where are the bulk of our customers coming from? Let's say your business is in Lekki, and you now saw, based on your customer record, that 50% of your customers are coming from Magudu. That is an inclination. It's an insight that your next branch should be in Magudu. So that is the importance of customer data. Another example, maybe your sales slows down. You have to go back to your customer data and look at it. People that have bought from us before, how can we do retargeting? It's called retargeting in marketing. How can we retarget them and bring them back again? How can we get our customers to recommend other customers to us? The next one is your financing structure. In terms of invoicing, receipt, expense approval, what is the limit? As the CEO of the business, what is your approval limit for expenses? Do you have board? Maybe you are still at that phase where you don't even have board. You are the one deciding everything. You still need to have approval limit. For instance, as a CEO, be a time waster. If you want to be approving 5,000 naira, 6,000 naira expenses, when you can easily get an accountant or someone that can handle that 6,000, 5,000, you give those people responsibility and authority to execute the responsibility. Again, structures that you need in your business: operations, marketing, customer service, and financing structure. Let me now drill down into finance, understanding your numbers, because I perceive that one of the challenges that small business owners have is this issue of numbers. And I'm not saying that you should you should become an expert in them because you're not an accountant. You need to hire an accountant. Let's assume that the business is not even at the level you can hire an accountant. You can use software. You can even use normal book to take your record. Of course, you shouldn't be doing that right now because tech age where you are in Abuja, you want to access your record in Lagos, you can easily access it. You're out of the country, you can easily access your record. These are the metrics. The first one is revenue. Revenue is the same as turnover and sales. That is the money that comes in from exchange of your product or service. The next one is cost of goods sold. What it costs you to sell a particular good. Then we have operating expenses, net profit, cash flow, break-even point, and customer acquisition cost. But I'm going to try and explain them with this illustration: profit, cash flow, break-even point, and customer acquisition cost. But I'm going to try and explain them with this illustration. This is what a typical account should look like, a simple account. On your account, you have your revenue. Revenue is the sales that you have made. So let's say you are made in the month of June is X amount. Let's just put maybe 10 million. That's total revenue that you made. The first thing you do is to less your direct expenses. Direct expenses are those expenses that are directly related to that sale. Again, as a bakery owner, what are some of the direct expenses that you are likely to incur? The first one is cost of flour. The flour that you used in producing the bread is direct expenses. Another one could be the cost of laborers, the people that molded the bread, that worked in the bakery and all to put the dough together, to mix the dough and come up with a finished product. That is direct labor. So let's say your total direct cost is 4 million. I'm just taking random numbers as it comes to my mind. So the difference is 6 million. If you take 4 million from 10 million, you have 6 million. So the 6 million is your gross profit. You still need to take it through another layer. You have to now take out your indirect expenses. Examples of indirect expenses: salaries of other staff that you have. Don't forget, in the first instance, you removed salaries of people or the wages of the direct labor that the people that bake the bread. Now, you have other staff. Maybe you have admin staff, you have sales staff, and you as the owner of the business, you also need to be paid. Your salaries comes under indirect expenses. Marketing expenses: when you are done, you need to now market the products. Most bakeries will now have delivery van. If you have your own delivery van, good. If you don't have your own delivery van and you have to now outsource that part of your operation, logistics, whatever cost that is, all other expenses, take out that from your gross profit, you arrive at your net profit. Divide your net profit into 3 buckets. The first bucket is plowback profit. The next one is distribution. And the third is reinvestment. In the case of this bakery owner that has made 3 million naira as profit for the year, if 3 million naira is our profit for the year, supposed to treat this 3 million, I said plow back 50% minimum into the business. So it means you will put back 1.5 million into the business. Then I said distribution to partners. What does this mean? Maybe your business is running based on funds that you got from partners. You have partners in the business, or you have a friend that you've collaborated with, or it's just you. I do not believe, my own personal philosophy, I don't believe that people should just suffer and not enjoy the fruit of their reward. So in a way, 10% of your profit to take it for yourself, I don't think is going above board. The next one is now investment into other asset classes. For that reinvestment part, what form can it take? I believe it can take 2 forms. The first one is additional stocks. Is I can look for business in business opportunities for my business. So when people say that my business is not doing well, the first inclination is for them to go out of the business and look for other things. But guys, do you know that for every business, there are at least 10 other businesses that you can bring out from your existing business? So those are the things I call business in business opportunities. Let me give you an example. I have a hotel business and my hotel business is not doing well. So I want to go into another business. I said, before you go into another business, think about it well. In a typical hotel business, there are 10 other businesses that you can bring out. Number one, you can have you have swimming pool in your hotel. Can you convert it to a swimming school where people come, they pay to swim every week? They're not lodged in your hotel. The only business they have with the hotel is they come to swim every Saturday and they pay. Another one, your business has a restaurant. Your hotel, a typical hotel would have a restaurant. Who said the restaurant should only serve in-house guests? Why can't it be opened to be a restaurant that every other person can come, even people from outside? Hotel has a gym for your guests. Who says that the gym needs to be for the hotel alone? You can open up the gym, and I can go on and on. I can list at least 10 business opportunities in every business. Let me do for fashion designer. A fashion designer, bespoke tailoring is a business opportunity. Ready to wear is another business opportunity. Specialization, you become a specialized uniform maker. That's another business opportunity. You become a supplier of fabrics to not just for your own operations, but to other things. You start selling things that you use in making clothes, thread, needles, and all of those things to other. Now you have moved from B2C to B2B. The other portion that I said, invest into other asset classes. What are some asset classes that you can think about? Generally, investment is divided into 3 buckets. We have low risk investment, medium risk investment, high risk investment. Low risk investment like mutual funds, real estate, precious stones. The person bought gold per gram, a gram of gold in 2021. He bought it at 24,000 naira, 24,000 naira per gram. As at now, 2025, a gram of gold is 168,000 naira. So his investments had increased by 582%. So this is a way to hedge against inflation. Gold, silver, diamond, and all those kind of investments. Then the next one is medium risk assets. Stocks, ETF, agro commodities. You must understand your cash flow. I said part of the things that you must understand, cash flow is one of them. Cash flow, just break it down, it's just English. Cash flow, how cash is flowing, and flow can be in or out. So you must understand how cash flows into your business and how it flows out of your business. I made a post earlier just before this session where I just asked a question. I said, as an entrepreneur, do you have no payment dates in your business? The days that you don't pay out money to people. If you don't have, you should start having it. It's a good cash flow management strategy. There are 3 dimensions of cash flow. Cash flow from investing, from operations, from finance. It is possible that people will invest into your business, right? And it's also possible that you invest into the business of other people. So cash flow from investing activity. Operation talks about your usual operations. Maybe you're a fashion designer. When you make clothes and you sell, that kind of cash is cash flow operations because you get it from operations. And for financing, I'm sure that we're going to have a presentation from Providus Bank. Bankers are there to be able to let you understand the source of financing and all of that. So when you get a loan from a bank, it's more like financing cash flow. What are the other sources of finance that is open to my business as a business owner? Grants, angel investors. In Nigeria right now, we have Lagos Angel Investing Network. Bank loans, the bankers are there to explain how that works. The next one is crowdfunding. This is a bit tricky because there are laws, especially from SEC point of view. SEC is Securities and Exchange Commission. If you're going to do crowdfunding in Nigeria and it's crowdfunding for the purpose of investment, there is a regulation around it. If it's cash flow for the purpose of gifts, for instance, someone comes up and wants to raise money from the public for a cause, I want to give food items to people in Benue, people that were affected by the violence in Benue. So those kind of things are allowed, less regulated, less stringent. But if it is you come to the public, say, I want to raise money and I'm going to pay you back some sort of interest. You're going to raise money from the public. It has to be done through SEC. Either you're going through a SEC licensed company. Example, you can go through asset managers and they will help you to raise funds from the public. You can issue commercial paper on your behalf and raise funding for you. Any kind of fixed income instrument can be used to raise funds for you, but you cannot come to the open and declare that you want to raise funds without license. Revenue-based financing is you pledging a percentage of your future revenue to the investor.